What do you need to do before the for sale sign goes up? This is the Issues Watch podcast. Hi, I'm Don Meyer, Chief Marketing Officer at the New Jersey Society of CPAs, and welcome to the Issues Watch podcast. Selling a business involves meticulous planning and strategic actions long before the for sale sign goes up. Accountants play a pivotal role in helping clients with initiatives that can significantly boost the value of their company over several years. In the spring issue of New Jersey CPA magazine, NJCPA member Sal Schibell examined strategies aimed at maximizing a business's value years before the sale. Sal joins me today to discuss his article, Succession Planning, Key Pre-Sale Strategies for Optimal Returns. Welcome, Sal.
Thank you.
All right, so Sal, the first point you made in your article was to establish a vision for the end game. Can you explain how CPAs can help clients create a vision for an end game?
Well, I think an end game really has to start in the beginning, okay? I mean, you have to start with a sound foundation. You have to start with a buy-sell agreement. And you really have to understand where your company is going, okay? Of course, a lot of companies do this midterm, not necessarily in the very beginning, but I recommend sometime near the beginning of the start of the enterprise that you develop where you want to wind up and you put together all your information and data, plus set up your buy-sell agreements in order for you to orderly move forward.
Okay. And I guess that's why they call it succession planning, because you actually have to plan for these things in advance, right?
Yeah, I mean, you're right, exactly. I mean, first of all, very important, you have to have succession. Because if you don't have succession, then you really have nothing. Then you have a termination. So the main thing is that you have to decide where your business is going to go somewhere along the line, probably within the first 5 years. And then you can start working with your accountant and your lawyers and develop a plan as to how you're going to move forward, the value of your business, and so forth.
Okay, great. So different types of companies have different reporting requirements. What's important for CPAs to discuss with their clients about financial reporting in relation to succession planning?
Well, I mean, I guess what I'm really going to do, I'm going to focus on the smaller business, not the larger business related to maybe business might report for the SEC or something like that. Okay.
Okay.
So basically, I think when you first start out with your reporting, you have to decide just what type of reporting you're going to have or what's required. Okay, what's required of different agencies or so forth like that. As far as accounting goes, you have to determine how you're going to report. Like in other words, are you going to go on a cash basis? Or are you going to be an accrual basis client? And pretty much so that's determined to some degree by the industry that you're in. Okay, like if you're in construction and you might be large enough, you might have percentage of completion type accounting. But if you're not in construction, I think basically what you really have to do, whether you use the cash basis for taxes, I think for reporting purposes and succession planning, you're going to have to develop accrual basis financial statements, because in order to determine the value of your business, you need a basis, and accrual basis financial statements would be your basis to start with.
Okay. So why is it important for companies to develop future leaders, and how can a CPA help with that?
Well, it's important to develop a leader because number one, developing leaders within a company also helps develop the company. And when we talk about developing the company, the people of the company, I always refer to something called open book management. And I'm an advocate of open book management, and I wrote many articles on open book management. And basically, open book management is what the name says. It means that basically the employer opens their books to the employees. And basically, in short form, how this works is that the employees get a look at the financial information of the company, and they learn to understand what the financial statement is and how it's developed. And through that process, they get to work together and understand the elements of the company, and therefore when they work together and understand the elements of the company and also what makes the company profitable, they'll work toward that goal and also work toward that goal together with the employees in a joint and collective effort. And also, on top of that, the employees are rewarded. They're rewarded for their efforts. In other words, the employers set up games that different divisions can play. And based upon the targets that are set for each different division that a company might have, the employees earn bonus points. And this pulls the whole company together for the better of the company and also increases the profitability of the company and also develops leaders within the company for the future.
Okay, that's great. Now, would you say that type of open book management, does that occur with employees basically from day one, or is it usually something that you kind of like employees work into the longer they've been with a company?
No, it basically, if a company decides to use open book management, if they adopt that, it starts right from the get-go, meaning that a new employee gets involved in it. The whole company gets involved in it normally. And basically what happens is that you can break it down by departments, or you can work with the whole company according to the size of the company. I mean, if you have a large company, of course, you would want to break it down by departments. You might have meetings with the whole company, and then each department with its goals that have been assessed to the department, they'll work towards certain goals that are achievable for that department. And it's basically to set up achievable goals so that the employees can work toward these goals and improve the operation of the company.
Okay. And that makes a lot of sense. I think sometimes there's a reluctance on the part of leaders at a company who've been there a while. I think they're reluctant to bring in new staff into this type of open book management too soon because I think they're always afraid that they're going to leave. But I guess the flip side of that is if you don't make them an integral part of the company right away, then they might leave for that reason.
Right. I mean, I've seen this work, and I was involved with a national company that utilized it. And a lot of employers don't want to open their books, but you have to be honest and you have to open the books and you have to see everything. And I'll tell you, it did wonders for this national company. I mean, the employees grew together, they worked together, and they all had goals to achieve. And they worked toward getting those goals, to achieving those goals. And they were compensated as if they achieved the goals, they were compensated. And over the long run, it made the company more profitable and more marketable.
And I think these days, younger generations, they want to feel a part of the decision-making process, and they want to know why certain decisions that affect them are
Right.
being made and how those conclusions are being reached.
Right. Absolutely. It's very important that your employees understand your operation. You want them to feel as they're part of your company. You don't really want them to feel and believe that they're an outsider, because that's not going to do you any good. That's not going to do your company any good.
Right, exactly. Okay. So how can a CPA help clients scale their business, and why is it important to consider that?
Well, basically, I says the job of a CPA is to understand, first of all, understand the business of the client, and then help the client improve his business by using various tools, and also not only that, understanding the business and the type of business that the client has, and what assets that can be employed will work to enhance the business and scale the business to where it has to go.
Okay. All right. So what else would you suggest CPAs work on with clients to help increase the future value of their business? I guess that's really the $64,000 question, right?
Yeah, right, exactly. Well, of course, I mean, it takes a lot of people to get involved with increasing the value of a company. I mean, a lot of things increase the value of a company. First of all, technology increases the value of the company. A good marketing plan increases the value of the company. Of course, being very profitable increases the value of the company. So, and again, the industry you're in affects the value of your company. I mean, it determines possibly how far the company can go and how high that value can be. So, yeah, you have the CPA and other people have to be involved to analyze all these factors. Of course, the CPA doesn't know everything. I mean, there's technology that you may not be aware of that the that has to be developed within a company and that the engineers get involved in. But a CPA has to try to help the owner pull everything together in order that he can put his package together. He can put a truly valuable company together that when saleable or at the point of saleability, I mean, the buyer is going to see that there's true value here, and he's going to get top dollar for that company.
Right. And of course, CPAs are forced to know so much these days and work in so many different areas. Is it important for CPAs to pull in other CPAs or other experts to help with the increasing the future value of a business? If there are areas, perhaps you mentioned marketing, there's technology, all those things. It'd be tough for a CPA to be an expert in everything. Is it important for CPAs to bring in other experts?
Yeah, absolutely. And to tell you, I mean, I'm a tax guy, really. And it's unfortunate in some degree because I also have a certification in financial planning and and have also for certifications in cost analysis and so forth, because I've been around a little while and therefore I increased my education as I went along. I have a master's in tax law and also an MBA. But you have to work with a whole team. You have to develop a team that's gonna move the company forward and add to the value of the company. I don't think, well, I mean, of course, today you have very large CPA firms, but you have to use all your resources that are available to help the company so that it can move forward and get the best from the end game.
All right, well, Sal, we really appreciate your time and thanks again for joining us today.
Thank you very much, and it was great doing it. And I'm always here if someone like to talk about something.
Thank you very much. Thanks for listening and watching. For information about succession planning, visit njcpa.org/hub/succession. And look for Sal's article in the spring 2024 issue of New Jersey CPA Magazine, available online at njcpa.org/New Jersey CPA.